By the end of September, only then we break out here. It is getting ugly, guys. Every single cycle, this will not hold support for us, guys. I know it's painful. The Bitcoin correction is not over. Bitcoin is continuously going lower and lower. And I know some of you guys are getting crushed here insanely with these downwards movements. And I know you're also getting frustrated and don't know when this is going to end. Unfortunately, today I have really, really bad news for you. We are not out of it yet. We are not even close. And I'm going to show you what I have found and has to be proven correct in every single cycle. But there is a light at the horizon that you will come out of it and get finally our bull run. Let's go. When we're looking on this daily chart here with our Bitcoin corrections that we had so far in this Bitcoin bull market, then I want to just quick to remind you that the longest one was 102 days, the longest correction that we had so far. Actually, this percentage number, oh no, that doesn't have to be updated. I just thought we went lower today, but we actually didn't. Regardless, when we're getting to the 102-day mark, I believe that in the short term, we're going to get a small bounce here back to the upside, but overall, the direction will potentially remain to the upside even after we are getting this small relief move here to higher levels in the short term. And I'm gonna explain you exactly what I mean during this video, so make sure that you watch here until the end so that you will actually understand what I'm talking about. When we are moving to this daily chart here, we have two different scenarios that can play out here in the midterm and the long term. One scenario is that the Bitcoin price finds finally support here around the mid-range. For now, we are getting supported there, don't get me wrong, around the $65,000 level. This is holding as support for the time being, but if we are losing the support and we are starting to close below $65,000, the next range that will give us support is between $62,000 and $60,000. And I believe if once we are coming down here, this will not hold support for us, guys. I believe we're going to travel lower and create a deviation below our long-term support of $56,000. And only then, when we are down here, we are going to see a massive reversal back to the upside. So why do I believe that right now that this is a viable scenario? Because I have found a chart when I look back in the past that is telling us that what we're experiencing right now is happening every single bull market cycle. So we just forget about it because it was 4 years ago. What was 4 years ago? Everybody keeps forgetting. And that is our problem here. We have bull market amnesia in terms of these painful corrections that we are experiencing here every single cycle, and overlook it by the positivity of the overall run where we made life-changing money. But forget that we had actually longer periods where we were going sideways and also having major shakeouts to the downside with deviations. And only after these downside deviations, we saw a proper reversal in that reset back to the upside. Now, the other scenario is that actually, in fact, the $65,000 level will hold support. We are getting a strong bounce from here back to the upside, break above $71,000, move above the resistance, and do something which we haven't done ever in a bull market cycle, and continue directly to go higher here. Why do I say we never have done something like this? Because here is a time factor playing a key role. And only based on this time factor, we know when this bull market will properly resume and how long the sideways chop will actually last here. When we move here briefly into the lower time frames, what you can see here, I have cleaned up a little bit the fair value gaps, the footprints, imbalance, whatever you want to call it. On the chart, we had two, like one here and one like here. So I took them out because they were cleared, and now we still have 3 fair value gaps on the chart. We have one around the $70,600 level on the higher side, and just below us, we're really close to it, $63,000 to $64,500. And if we are not seeing here really soon, at some point this week, a big move here to the upside, and in my opinion, we need this move in the next 24 to 36 hours. If we're not seeing that with a reclaim of $67,000, chances are that we are coming down and filling this imbalance that is just sitting below us. And then there is another one at $52,000 to $54,000. If we fill this one here, up here, it is getting ugly, guys. I'm not gonna lie, you know. So there is a real scenario that we will come down and fill this and only then go back to the upside. So I want you to be aware of that, and you should ask yourself, can your portfolio withstand a move into these levels? Can you hold your positions into these levels without getting wrecked? If the answer is no, then it might be time, even though it's now, in my opinion, a little bit too late, but still, you should reconsider to switch up your portfolio here a little bit and potentially start taking some smaller losses to buy back at lower prices, just in case that we come down here, that you have some money on the sideline. Because if we just go straight down to these levels and your portfolio get wrecked, did it really help? No. If you take a small loss now, yes, I know it's painful, and we just come down to like 63 and then we bounce back up, okay, you get back, and then we resume to go to the upside, and you make all the money back that you potentially take now as a loss, as long as it's not like 100%, you know. Let's say you get out right now, and we come down, even if it's to 55, and you enter back here. Once we are reversing back to the upside, you make it all back, and you will actually have more money than what you initially took as a loss over here right now. So you have to think about this. You have to think about this, and you have to make sure that you are positioned correctly and ask yourself, can you sustain a move into these lower levels here? Then on the weekly chart, also interesting to observe here for the moment is that the historical volatility is still going down. So even with this crazy move here to the downside, that what we basically see here every single day is Bitcoin goes a little bit up, then goes sideways, then goes down, then it goes up a little bit again, goes sideways, goes lower. So, and even though we have that kind of chop here right now, the volatility is not back. It's not near to be back right now. And we are testing now the middle band of the Bollinger Band on the weekly chart at the $64,000 level, more or less. If that is holding, everything will be fine. We resume to chop between 64 and 70 until we continue to break it to the upside. If we lose the middle band, guys, get ready that we will come down to like $52,000, $54,000, $56,000. Just put it out. I'm just going to put it out there. Don't shoot the messenger, guys, you know, but this is unfortunately what we need to be prepared for right now, because we are on the brink, really on the brink, to seeing a move like that. If you are a little degenerate and you want to trade in these crazy market conditions, don't forget, guys, BYBIT is still there with a $30,000 bonus with the link here down below. Also on Margex, if you cannot use BYBIT, use Margex with the link down below here. And if you want to copy trade me, then you get still the highest bonus in the industry from FAIRDESK, $120,000 with the link here. And if you need some free money, guys, especially if you want to buy the dip, guys, then make sure that you really sign up right now on BYBIT. Deposit only $100, guys, $100. Subscribe to the channel, activate the notifications, and just wait until I announce a $1,000 winner here once live again on one of my videos here. But you need to sign up with the link here in the next, basically do it now. Sign up now and deposit $100 to be eligible when I make the draw for the winner. We have already drawn one. We're gonna bring that person on the show that you actually see it's a real person, and we're gonna announce between now and next Monday. Yes, next Monday. The next one could be in 5 minutes, could be tomorrow, could be in 3 days, could be on Monday. Who knows? You have to watch this channel to find out and follow the rules to be part of that giveaway here. And especially now where you need money to buy dips, that would come in quite handy. On this 4-hourly chart, we still have a bullish divergence. Right now, I'm really getting a little bit concerned here that this will be invalidated because of the way that the RSI is coming down here. If we are not getting really soon here, let's say in the next 8 hours, a bounce from the RSI to the upside, and also price-wise, with that falling wedge that we are forming here and breaking out of that falling wedge, be prepared that the bullish divergence will be invalidated and that we break into lower levels here. The death cross is now in full swing. I was usually expecting that we are turning around here, but it's not looking like it for the time being. For that, we need to reclaim the 50 moving average at $67,000 approximately and close some candles above that to start turning the trend around and getting another golden cross with a nice push here to the upside. So now I want to show you the chart that is telling me that we are not out of the worst yet. And that is a chart that is telling us that after the halving, we went for 160 days sideways before we finally continued the bull run. So for 160 days, the bull market was basically on pause, grinding down, chopping sideways before we finally saw a return of a proper bull run. So we saw this here in 2016, we saw this in 2020, and we are seeing this also once again right now. So, and something really interesting that I have found here is that for the bull market to resume and to get out of the sideways chop, we need to break the pre-halving high of this cycle. Only if we break the pre-halving high, we're gonna continue to move to the upside. Here in 2016, that was $791, got broken 160 days after the actual second halving, and there you see we started to go to the upside. Now, in 2020, we saw the same thing. Here in 2019, pre-halving high, $13,993, 160 days of sideways move after the halving, and only then we broke that price level and got our proper bull run. Now the same thing again. Unfortunately, our pre-halving high is almost $74,000, so we need here more or less a $9,000 move before we resume the bull market trajectory, and we are not even close to complete a 160 days of the current post halving cycle. So we are in here right now only 60 days, so we have potentially another more or less 100 days in front of us until here the 26th of September before we potentially resume the bull run, and in between we are just getting chopped up, you know. So we just gonna see more chop happening where we potentially come here to 72, 73, maybe even 74, and get rejected from there, come back to the bottom range of 56, go back up again, 74, 56, and then by the end of September, only then we break out here. So now we have to factor in we never had ETFs, we never had multiple different asset ETFs in crypto, like the Ethereum ETFs. So these could be all catalysts that could lead to a premature continued move to the upside for Bitcoin and the overall market. So instead of 160 days, it could be that we just need 120, 140 days. But I really believe that we are not out of it yet. So we need some catalyst to get us above the pre-halving high to continue the bull run. And until we are getting this, we are stuck, unfortunately, in the current range here. Below us, on the daily chart, again, there is an imminent fair value gap that makes it quite likely that we come down and fill this, even though the indicators telling us we are heavily oversold on the stochastic, on the usual RSI, and also the MACD is really bearish here. So a lot of bearish indications on the chart for the time being, but indicators can be thrown out of the window if miners are selling, if you have a time factor of previous cycles playing out that is telling us, hey, post-halving, 160 days of sideways chop, then we resume. So, and from where that sideways chop is actually coming is from miners selling Bitcoin to buy new equipment to be profitable once again, because after the halving, the profitability gets cut in half. So they only receive half the coins that they did before, which means the price needs to go up, that they earn the same amount of money for the same amount of coins, and for that they need new equipment. And during this 160-day period, they are basically switching and getting new equipment, setting everything up, and basically selling coins that they need to continue their operations. Of course, some miners get rinsed out in the process, but the strong ones that come out at the end, they are the ones that are then, of course, also stop selling, and then we get the continuation of the bull run. So the liquidation levels also telling us a really clear story here right now. A short-term relief bounce is definitely in the cards to $70,000 because of the over-leveraged short positions that we are seeing here. We're seeing also now some low-leveraged short positions getting confident that we continue to go to the downside and coming here into the market, which is telling me that there is still a high chance that they are getting in the imminent short term punished for that. But also be aware of, even if we get that short term bounce, it might be a dead cat bounce where we get from up here again over a 2, 3, 4 week period, slam down, come finally into the lower $60,000 level, and only then start slowly going back up, completing the 160-day cycle, breaking out above $74,000 and continue to go to the upside. So be aware of that. If we are not getting first a flush to the downside, then take this out, then come back down here, create a lower high, a higher low, here a higher low, and then finally go back to the upside. When we're looking at the liquidation heat map, here I went now to the 6 month chart to show you that the highest concentration is still here at $73,000, but there's also really strong resistance. And below us, there is soon not much anymore. So we could go all the way down to like $63,500. That would fill the fair value gap that I was talking about. And from there, we could see a short-term relief bounce to like $72,000 to take out all the over-leveraged short positions that are sitting up here, and then get the final move to the downside before we then resume to go into the proper bull run. The order book, so the order book was here. The order book is telling us basically the same story when we look at it. Major support between 64,500 all the way down to like 63,500. Here is massive support. There's a lot of buy orders. And once we're tapping into these buy orders, we should see a proper bounce back to the upside. When we're looking into the upside, then you see also here around the $72,100 level, there is major resistance. There are the biggest sell orders stacked right now. Guys, you have to understand, this sideways chop is not something that we are not used to. We just have bull market amnesia, where we are forgetting these periods where we are going for 160 days sideways before we continue actually to go to the upside. So 160 days is almost 6 months, half a year. It's a long time, but the people like you and me that are sticking around in this market, we are the ones that are making the life-changing money, the wife-changing money once we're coming out of this period. So stay strong, stay smart, make a lot of money, and I'm gonna see you then tomorrow once again.